All right, what's going on, everybody? My name is Austin,
Susie.
and welcome back to the Wholesome Lending Group podcast. We started this channel specifically to help real estate investors get the funding they need to acquire the deals that they find quickly. And in this video, we want to talk about DSCR loans. It's probably one of the number one toolkits you can have in your pocket as a real estate investor when it comes to accessing funding and acquiring funding for your deals. And so we're going to talk about how it works. We're going to talk about some of the clients that we've worked with, some of the things that have come up, some expectations you might have. And so it's not just an information video. Some of it's going to be case study, us sharing how we help entrepreneurs get the funding they're looking for the deals that they find. So if you're not familiar, DSCR stands for Debt Service Coverage Ratio. And so when it comes to real estate investing, when it comes to real estate loans, it's not like a traditional mortgage that you'll get to buy a property where you have to show all your financials. Yep. You have to qualify for yourself. You have to put 20% down, all these things. There are some things that are similar, right, but not for this. When it comes to real estate, when banks see that you're going to acquire a property specifically for an investment, it's an asset, they have other loan products that are useful, and DSCR, debt service coverage ratio, is one of them. Now, not just regular banks, also private lenders as well. Yeah. And so we work with private lenders ourselves. And so how DSCR loans work in a nutshell, right? There's plenty of videos you could probably see, but I'm just going to give you a basic understanding to make it real easy at third grade level. The DSCR loan works is they're looking for you to buy a property, and once the rent on this property should cover your mortgage of what they're going to lend you and some, right? There's a point requirement that lets you know, like, hey, this is good or this is bad. If you go all the way to 1 point and then you're like, okay, this looks healthy. But essentially the rent that you're going to get on the property, if it covers the mortgage and some, this is a good property. And so this is kind of where the name comes from. The debt service will be covered. The ratio of the debt service being covered is what they're trying to see. If it's a good ratio, that's what I meant when I said 1 point. They go, okay, perfect. We can lend this property. Why is this awesome? Because you don't have to qualify with your personal finances. Yep. You can get into real estate as a beginner. You can get into real estate without having all of the funds necessary. Now, the caveat that people don't tell you, though, is you do still need to put money down for these DSCR loans. This isn't a 0%, not 0%. This isn't a zero down payment way to get into real estate. If you're looking for that, then you're probably looking for, house hacking with FHA, right? Buying a multifamily, living in one. Then you can get in for like as low as 3 or 5%. But there is no real estate investing when it comes to you owning an asset that you can get into without putting any money down. But DSCR loans, they're fantastic because banks don't care how many you got. They're not looking at your personal finances. You don't need to qualify. So you can get funding fast, and it doesn't really matter. Some things matter when it comes to your personal finances, but you don't have to qualify income-wise on your own. So that's like the number one thing. But we've helped a lot of different clients on it. And so maybe we can talk a little bit more too. And just so you guys are aware, my wife, Susie, my beautiful wife, Susie here, is a mortgage loan originator. And so we both work with real estate investors all day, but we're not just random people on YouTube. Like, we're actually invested and we work in the space often. And so from some of the clients that we've had, what other factors will new real estate investors need to be aware of if they're trying to get approved for a DSCR loan to get a property per se?
Yeah, so I think you nailed it. Your finances aren't going to be heavily scrutinized.
Yes.
So, as like everyone knows, a traditional mortgage, they want to see your taxes. They want to see your W-2s. They want to make sure that you have money, right? With these properties or this type of loan, they don't really care for that. They just want to see that, you have the down payment, which is usually between 15-20% of whatever the property value is. Yeah. Also, credit scores do and don't play into it.
Yeah, when I say,
so when I say it, they do. If you want the best rate, you're gonna have to have a good credit score. Yeah. Okay, so on the low end, you can still get approved for like a 650. However, your rates aren't going to be favorable, right? Now we're looking into more the, 12, 13%.
Okay, I was going to say, give me a ballpark on rates.
Yeah, 12, 13%. Whereas, a 700 plus, 780, 800 credit score, we're talking about maybe like a 9 or 10% or even lower.
Yes.
And honestly, all these rates are dependent on the market, right? If the market goes up and down, rates go up and down. So at the time of this recording, rates are around 9, 10%. So credit scores do matter if you're rate sensitive.
Yeah.
Right. The cool part about them is they don't ever report your personal credit.
Yes.
So it doesn't work like a traditional mortgage where if you buy a primary A, that's going to go on your credit report and then your DTI is going to go up because now you have this big loan showing on your credit report.
Yes.
This only goes into your LLC. So if you've never opened up an LLC and you're trying to do a DSCR, that's going to be probably your number one step, right?
Yes.
So you create an LLC in whatever state you're going to be buying that property in, right? So we recently just helped a client, Lourdes. She lives in Chicago, Illinois, but she's buying a property in Indiana. So she already had an LLC in Chicago or in Illinois. However, she needed one in Indiana. So what we did, we just filed a foreign entity with her LLC from Illinois. So that way she could transact in both states, right? And so it's super easy. It always just falls under an LLC. That's like the number one requirement. You also need like an operating agreement dictating who's all on the LLC and all that good stuff. You can go on ChatGPT and create your own operating agreement. It's nothing fancy. It's literally just a paper to suffice the bank's underwriting guidelines. Underwriting is super more flexible than a traditional like mortgage where they ask for everything and everybody. Usually you do need an inspection, not inspection. What's the word? I'm missing the word. When you go in and you check the appraisal. Sorry. I just drew a blank. You would need an appraisal to see what it would appraise as, right? And so that's what they would use to qualify you, right? And so, like you were saying, let's say for easy math, right? Like let's say your rent's $2,000. You can charge $2,000 for this property, and you get this DSCR, and your monthly payment to the bank is gonna be $1,000. That means that after it's all said and done, you get to pocket $1,000. That's a good deal right there. Any bank is gonna bite on that and be like, "Yeah, of course."
Yeah, because you look credible. They know that you'll be able to pay back this loan.
Exactly. So as long as there's that gap, at least $100 gap or something between what you pay to the bank and what you charge for rent, you got a deal. Obviously, the bigger that gap is, the more income you can retain in your pocket, the better the deal. Because obviously, you're going to keep more money. You're making more profit. Yeah.
Now let's talk about, so that's DSCR for real estate investing. We've had clients, whether they were buying a long-term rental or they're fixing, flipping, DSCR is still a great tool because there's so many different pieces and parts to the real estate game. But for this funding aspect, knowing what's the right funding product I need in order for me to accomplish my deal, as well as make sure I'm profitable, DSCR is fantastic for it. But DSCR is not only for acquiring properties. If you currently have a property, DSCR could service you as well. And that's what we call DSCR Refi.
Yeah, the refi, there's two different types of refi, but in short, you could just refi to lower your rate.
Yes.
Number one, or you could refi to get cash out.
Yes.
Right. So
cash out refi.
Cash out refi. So number one, if you're like, I don't need money, I'm cool the way that I am, I just really need a lower rate. Let's say you got in at a 13, your credits changed, the rates have gone down, so now you can refi at like a 9%, right? The other one is the one you were speaking of, which is like a cash out. Let's say we recently just helped someone out in Virginia doing this. And so basically they were cash strapped. They have like 4 different properties, right? They cash flow pretty well, but they wanted to buy another one, but they didn't have the asset to go and put $50K on a new down payment for a new property. So I said, hey, don't you have properties? And he's like, yeah. And I was like, haven't they gone up in value, right? Like you've gotten equity over the years. He's like, yeah. So we were able to get cash out from one of his properties that went up in value, and we were able to get him, I believe it was like 130,000.
Yeah,
And yeah, he used that to pay off all his credit card debt, right? And then the remaining, he's now looking for a new property to purchase because he's like a long-term property buyer, and he likes putting tenants in them and then just having them pay the rent. And so essentially, he took out 70% of the LTV of that property, did not put any money down at all, right? Because again, it's a cash out, and he got back some money to where now he can go and invest in a new property. So this is a really good strategy for people who have a couple different assets already and they've gone up in equity, and you just need more cash to do whatever you want with it, honestly.
Yeah.
This is a perfect strategy for that.
Now, there are so many different lenders, private and regular banks. I honestly am not a big fan of going to regular banks, mostly because it's not because they're sketchy or anything like that. They're great financial institutions, but when you're looking at loan products for your real estate investments, you want to make sure that you're looking at lenders that have some flexibility. And private lenders tend to have more flexibility, have more products they can work with you. And so that's extremely important, because you can go somewhere, get a product, and you're like, hey, you know what? I'm going to do a DSCR cash out refi here. And they're like, we're not really working with you. And then you think that this strategy is off the table, it doesn't exist, when really there are. And so something that you mentioned that maybe going down that train of thought is the LTV value. Depending on the lender that you go with, some of them will give you, 50% LTV, which stands to loan to value. That's what it stands for.
Yep.
Or some will give you up to 80. I've seen 80%, 90% LTV, which those are stricter requirements, because pretty much what they're saying is we'll cover 90% of the cost, or we'll cover 70%.
You only have to put down this much, or you only put down 10, which, like you said, is a lot more riskier. So not a lot of banks do that. And if they do, your rate will always be higher.
Yes.
Higher risk for the bank means higher interest rate for the buyer.
Absolutely.
So that's a good rule of thumb. That's a good one.
A good 70% LTV, 75% LTV is fantastic. And maybe you're in a situation, you click this video because you're trying to learn about more DSCR type products, or you've reached out to some people, but you're not really sure. You want to talk to a human, and you want to see what's the best rate I can get, what are some of the best products I can get, where they're not going to scrutinize, go over my finances. They're just going to help me lock in this deal and get it done. We can help you. If you click the link below, if you go to wholesomelendinggroup.com or shoot us an email, we can connect you with our private lenders, and we can work through making sure you're optimized and you're ready to get approved for these low rate, high LTV products that can help you get into these investment properties, these long-term rentals, these Airbnb properties, these fix and flips, things of that nature. And so we wanted to make a whole video on DSCR because most real estate investors don't know about it. And so it's an easy way to get into the real estate game. It's a product that's available, but obviously real estate to a certain extent seems extremely overwhelming if you're brand new.
Yeah.
But there are a lot of tools out there and a lot of institutions out there that want to see you win, that everyone can eat at the same time.
Yeah, absolutely. So, we work, like you were saying, we work with a couple of different lenders where we could give you a term sheet same day. So if you give us, property address, how much is the rent, do you still owe anything on it, we'll give you a rate or just like a term sheet with all the specs same day. You don't have to wait a couple of days like most major banks do. These are more private, more boutique. And so you're able to see real time, like, okay, this is a good deal, this is not, and then we can move forward if everything pans out.
Yeah, sounds good. So hopefully that's helpful. We love meeting real estate investors and other entrepreneurs in this space. So reach out if you're looking for that term sheet and that rate sheet same day. At the same time, this is a podcast. So at the end of every episode, we just have personal questions. This way you guys need to learn a little bit more about us. And then we just need to yap for a quick second. And so I know previously we talked about like some current world events, but it's 2026. We just recently moved. We're getting a little bit stable here. We're based in Southern California. What are you looking forward to this year or this summer? What are some things you're trying to accomplish?
Yeah, so I think trying to get our new house optimized to how we like it, what fits our style, get everything organized and everything looking good so we can finally just rest and settle. But also looking to travel, looking to go to new places. Honestly, Japan is always like in my heart. I don't know why. I don't even like anime like that. It's just the vibes. If you've been to Japan, you know what I'm talking about.
Yeah.
But I would love to explore like other countries, like the Turkeys, like the Indias, the more of Europe if we get a chance, or like South Africa. I'd love to go to Africa. I mean, we went to Egypt, but more of those countries. So looking forward to that. How about yourself?
Yeah, definitely travel. A lot of local events. We got little kids. So I'm excited to do just regular stuff with them. Go to, parks and just, I mean, we live in Los Angeles, so there's a lot of great things to do as far as entertainment and amusement. So I'm excited about that. But then also, for travel, short trips, long trips, trying to pick a continent. We're on a Central American kick for a minute. Because we're so close, let's hit everything down there. But then the temptation to do a big trip in Asia. It's a lot cheaper in Asia, but there's a lot more cool things to see. I want to hand over to China while we still can, and I don't know, I might close the door if we get there. So I do want to go over to China and see some amazing things over there. I feel like we only scratched the surface with Japan. It's our first Eastern Asian country.
Yeah.
But at the same time, like I've never been to Europe. You've been to Spain, you've been to Italy. And so Europe, it's cheap to get over there. It's more expensive there. Asia is expensive to get over there, but it's cheap over there.
Yeah.
So it's like, but you can hit a lot. As you saw, I helped you guys itinerary in Italy. And you guys went all over Italy. Like if you guys just did if you covered the same mileage between the UK and all the countries around it, you probably could hit like 9 countries in the same distance that you cover, because Italy is ginormous.
Yeah.
It's like the difference between California and then like hitting the East Coast from like New York all the way down to Virginia. You cover like 5 states.
Yeah, Italy's pretty, it's not wide, but it's pretty long.
Yeah, it's like California.
Yeah, it's exactly like Cali. So yeah, I'm excited.
So I'm trying to decide, or we'll see how everything works out financially, if we can do some short trips. If we do short trips, we're probably going to be doing Caribbean or Central America. Probably Caribbean, Central America. South America is kind of far. Like it's like 12 hours to get to Brazil, but it could be worth it. But if I'm flying 12 hours, I'm going to Asia. Just to be honest with you.
If that flight's that long, I'm out of here.
Yeah, I'm going to Asia. I'm going to Europe. So we'll see. You guys also have to stay tuned with our adventures. And then also I'm excited about going to more real estate events, more meetup events. That's definitely something I want to do. Talk to more investors, meet more people, get some more people on the podcast. Maybe I'm not really sure how we're going to do it.
Yeah. We talked to a couple lenders, the ones that we work with. Scheduled some things so that they can come on and answer questions firsthand, and just really get to know the lenders, so that the people could see who they'd be working with if they choose to come work with us. Yeah,
that would be awesome. So stay tuned for that. That's what I'm super excited about. That's really what I'm looking forward to. So we appreciate you guys tuning in for this video. Again, same day term sheet. Click the link below. Send us an email, info@wholesamelendinggroup.com. And until then, we'll see you in the next one.
Peace.